Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick, senior editor at WeissRatings.com. He's speaking to us from Florida. Welcome back to the show, Sean.
Thanks for having me on.
Sean, uranium, is that the brightest thing on your investments right now?
Well, that is a bright thing in our investments. I'm underweight in uranium stocks. I want to own more of them. Considering that as you and I talk, actually, let me check on this. As you and I talk, Cameco is up 8%, which for a big stock is a heck of a move. UR Energy is up more than 6%. Energy Fuels is up 15%, and it's on and on and on. So now we have yet to see the price of uranium catch up with the stock, but what we're seeing in there is we're seeing investors positioning themselves, anticipating more government spending on uranium in the U.S. So I think that that is absolutely going to happen. There is a big flow of money that's still to come from the government. Will it all be bought in before it happens? I don't know, but certainly it's a good place to place your bets now.
With governments everywhere shoveling out money like crazy, are you worried about inflation eating into profits?
Oh, I've been writing about inflation for my subscribers for quite a bit now. Inflation is here. It absolutely is, and so you have to be positioned for that as well. Now, many people might think gold would be the thing you would invest in. So far, gold has not been going along with that story. The things that I'm investing in are those companies that have pricing power or that deal in commodities that should go up as inflation hits. Copper and oil, those are two examples. Mm-hmm. So those are the kinds of things that I'm looking at. Inflation is here. There's no more arguing about it. I keep seeing these milquetoast stories from the mainstream media about, what will happen with inflation? Inflation's here already, folks. It is. That horse is out of the barn. So people should definitely be investing with that in mind.
With that in mind, you said there is no everything. You have to be diversified, and I guess this is the kind of market that really proves it. Yeah,
it does. I mean, there is no one thing to invest in. I follow some very smart people online who are really focused on uranium or really focused on gold. Those are two examples. Lithium, another one, but there is no one thing to actually focus on. I think you need to have many irons in the fire because you're never sure what will be hot next. You can see things cool off. Just recently, copper decided to cool off after a heck of a run. Do I think the copper story is over? Absolutely not. I see this as an opportunity to add more copper miners and other copper leveraged stocks on the pullback because the next leg could be extraordinary.
We'll have more with Sean Brodrick right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Sean Brodrick. Sean, is oil picking up?
Yes, it's doing well for my subscribers. There's a lot of stuff going on with oil. In the U.S., oil is over $61 a barrel again. And so definitely you want to be exposed to that. There's a couple things. One is that the Atlanta Fed just came out with a revised GDP now forecast for the first quarter. And you have to understand, this is not an official forecast. This is their best guess of what's going on. Okay? And in January, the Fed was looking for annualized GDP growth in the first quarter of 5.2%. That's now up to 10%. What's happening? Retail sales, industrial production, construction spending, manufacturing, all these things are climbing. What does that mean for oil? Well, much more economic activity, which is what we're looking at, means increased oil demand. And it's not just here in the U.S. I mean, OPEC just came out with a new forecast for oil demand. They said that right now in the market globally, they're seeing 94 million barrels per day of oil demand. By next year, that is by 2022, they expect demand to be 99 million barrels per day. That's a big jump in the oil world, okay? And that is, that's the kind of demand we saw before the pandemic hit. So I guess they say by the beginning of next year, we'll see things return to normal. And so, meanwhile, many of these oil stocks have just been beaten down into the dirt, right? So, if you can find some that might have potential pricing power, that are in a good place, that maybe aren't going to be put through the ringer if prices go down again, because prices will go down again. In other words, ones that look cheap, now would be a good time to buy them.
Also, I was thinking with oil, with the pandemic plus with low prices previously, there was little exploration for oil. All that stopped. So at some point, you're going to have a supply and demand squeeze.
Right, and it's not just an exploration. Because exploration was cut down, all the oil services stocks just got fed into the wood chipper. I mean, it was awful because they saw their demand simply vaporize. Well, now we're seeing demand in the shale fields where fracking needs to be done, seeing that coming back, because when you have $60 oil, that'll definitely bring back $50 oil wood for that matter too. So, but a lot of those companies went out of business. They had this crazy business model where, they could get, loans from the banks based on the amount of reserves they had. Not cash flow, not revenue, reserves. So they would borrow as much money as possible and they'd go out and drill like crazy to prove up reserves so they could get more loans. Well, that came back and just wiped out plenty of those companies, just like a knife just ripping through the industry right there. So it's a much smaller industry right now, which if you have a company that's a survivor and isn't crippled by debt, that's the potential for a boom time. So that's why people should be looking at the oil industry right now.
We'll have more with Sean Brodrick right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Sean Brodrick. Sean, are electric vehicles hot?
Well, they've cooled down. They were really, really hot for a while. They have cooled down recently, but just like copper, and for basically the same reasons, I expect that we're about to see the next leg up in electric vehicles. Electric vehicles are a huge megatrend. This isn't something that isn't going away. That's actually one of the things that hurt the oil industry, was the surge we saw in all the regular car makers shifting over to EVs, the tremendous changeover we've seen announced at Volkswagen and GM and Ford and all the others. So, this isn't going away, and so we are seeing some reality come in to knock the market around, but those solid companies will do well, and not just in building electric vehicles, but in building the batteries for them, in building the charging infrastructure. That's going to be a huge thing, because you can have all the nice shiny electric vehicles you want, but you got to charge them, right? And you have to be able to charge them as you drive around. So that's a tremendous switch in how our economy works. And so I think this pullback is a gift. We took some gains, took a few little losses. That's okay. I mean, just as long as your gains outweigh your losses. And the next buying opportunity is coming. So I'm really looking forward to that too.
If EVs become a big vehicle trend in reality, because right now it's only 1 or 2%. Is there
more
also
like 5%, but yes.
Yeah, 5%. Oh, yeah. See, it shows you how dated, how outdated I am. But the infrastructure, electricity, that's they're gonna have to string millions of miles of new copper cable out there.
Well, most of the energy is moved along aluminum, just because it's more like affordable. You have more energy loss doing it that way. But copper, I mean, that gets expensive. And yes, but the actual units to recharge your cars, there's going to be so much copper in that. Never mind the fact that an electric vehicle has about 4 times the amount of copper in it that a regular car does. All that charging infrastructure requires much, much more copper than a tank in the ground with a gas pump on it ever did, right? So that is huge. When I said 5%, I was speaking globally. Here in North America, you might be right. It might be closer to 1 to 2%. I honestly don't know. North America is behind the world on that. It's places like China that really bend the curve out for like everyone else because they're going full speed ahead. China, Norway, though, no one's making bank on Norway at this point, but other places like that are really going full speed into the EV space. I believe North America will follow, which is why it's so exciting. We haven't really done it yet. And so that big changeover is yet to come because American car makers don't just sell in North America. They sell around the world. And where's the biggest car market in the world? China. So if China says, look, by 2035, we want almost all of our cars to be EVs, and you better make that shift now. Well, our car manufacturers have to adjust to that. So that's what we're seeing dictate the market right now, is they see the future coming and they're changing it over. So this isn't like some will they or won't they. They're gonna. It's actually happening. And so, you can see that big freight train coming. You definitely want to be on board for when it pulls out of the station.
Why isn't gold doing well when everything else is?
Oh my God. This is something I've been agonizing about and writing to my subscribers about. Yeah, gold. Okay, well, the most obvious reasons are that investors are looking forward to a post-pandemic recovery. More vaccines are rolling out. More stimulus, a lot more stimulus. So people, just like gold is a safe harbor, you need less of a safe harbor in this environment, right? That's one thing. The other is what's going on with the 10-year yield. Okay? That's just been on a tear. And I just sent a chart to my gold and silver trader subscribers comparing what's going on in the 10-year yield versus the gold price. People should look at the chart. I'm sure they have charting software. They can look that up. And the inverse relationship is stunning. So the rising 10-year yield, gold has no yield, right? So that just makes gold look less and less attractive. Also, the U.S. dollar is showing some recovery, which is confusing the heck out of those of us who thought that the fact that they're printing from here to eternity would hurt the dollar. Well, the dollar is actually a function of economic growth. Economic growth is looking better. And as the dollar goes higher, that weighs on gold. Now, the U.S. dollar still has to take out its February highs. We'll see if it can do that. Really, it's in a longer-term downtrend, but maybe this is the start of something. For all these reasons I've mentioned, but really people should look at a chart of a 10-year yield. For all these reasons, gold is under pressure. When does this stop? I've seen some very smart people say that the bottom in gold is soon, and I really hope they're right. I still have plenty of gold positions myself. I'd like them to go higher. It's just that for now I've put those on the back shelf and I've concentrated on other areas of the market that look, more exciting in the shorter term.
Are you surprised the price of silver has remained relatively depressed?
Well, you mean because it's a industrial metal, so why?
Yeah, with all the solar out there being built, you need silver for that.
Yeah, but really, whatever's happening in the gold market, silver often acts like it's leverage to that. It's unfair. I mean, on the other hand, you could say that since March, silver's been in an uptrend. I mean, in March it bottomed out somewhere around, I think, $12. It was horrible. And so, now it's much higher than that, which is different than gold. In fact, you just gave me an idea of something to send my subscribers. What's been happening in the gold and silver market since July or August? Because gold has really been in a downtrend since August. And silver has been range bound. It's not in a downtrend, not in an uptrend. So silver is outperforming gold. Now, that's what you expect to see in a precious metals bull market anyway. But the industrial component of silver has to be helping out. As you mentioned, solar energy, but it's much more than that. Silver is such a useful metal. It's used for so many, many things that as the global economy kicks into higher gear, there's going to be more demand for silver. I like silver a lot. I have more silver positions than gold positions personally. And I think there's a lot of potential in those stocks. So I think people should definitely keep that in mind going forward.
Sean, thank you so much for chatting with us.
Thanks for having me on.
My guest has been Sean Brodrick, Senior Editor at WeissRatings.com. If you have any questions for Sean or any of our other guests, you can send them to info@HowStreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.